Alrighty then. How is you all doing? Hope everybody doing well, ladies and gents. Hope you are having a wonderful beginning of the week. You know what time it is. It's your time for your daily dose of sanity in this insane market, of course. Hello, Ray. Hello, Damien. Hello, Casey. Howdy. As you per usual, we're gonna go over the day-to-day, market fluctuations and that ebb and flow. Nice tie. Thank you very much. I do like the red colors, one of my favorite ones. In fact, you don't really see it, but this jacket itself kind of has a pink reddish tint to it. The material, it's really subtle. You can't really see, but face to face you can actually see it. It's kind of had this. It's a summer jacket. It's actually kind of summerish, if you will. It gives nice vibes. Absolutely love it, and the tie as well. Really good combination indeed, sir. Now. Of course, it has nothing to do with the market. It's just, purely me liking that red color and matching that with other stuff I wear. It has nothing to do with today's market. Although, funny enough, of course, our broader anticipation is that the market will be flowing lower over time. We know that. There's nothing new under the sun. Basically, in today's session so far, as we've seen, we've generated a bit of a gap downwards, and so the market price action spent a little bit of time filling it in. At this point, I can say that gap was filled in. Those who are unaware of what I'm talking about, there is a level that started right here, basically when we closed last week's session, and as we started this session, we opened up with a gap all the way to where this candle opened up right here at the bottom. In essence, we have dropped in the first minute or so really rapidly downwards, corrected back up, locked it in, as you can tell. And so we spent a little bit of time wibbling, wobbling up and down, a little bit of ebb and flow on the grand scheme of things. Ended up filling in the gap. As you can see, we crossed over with full price action over the range where the gap was developed. Right now, arguably, we're entangled with it. We're basically testing it. In fact, funny enough, people don't realize it. One of the things oftentimes people who do not observe the market that closely, and arguably that's most people, are busy with their lives, works, and so on and so on. They don't follow that daily ebb and flow, and don't realize how persistent these levels are. And while the candlesticks are developing, as the market progresses, that ebb and flow, while it's moving, you can actually see the persistence and accuracy of the price action, maintaining and respecting, bouncing off, whatever terminology you want to use, all of these levels. And so they're very critical and crucial. In other words, these levels are identified and acknowledged by the vastness of the market, and mostly, arguably, because the really quick ebb and flow that you see in the market, those are the robotic automated systems, and those tend to be very precise, or rather precise enough, even though momentum per short period can be strong enough to push over that range, and in fact sort of get stuck on it and entangle with it at times, sometimes even push through. That is where momentum comes in. That's a very important thing. Gap happened an hour ago, not market open. You know what? You're right. I think you're right. I think you're right. It happened earlier. Basically, I might have misspoken. Yes, it actually happened just earlier. Right. Didn't really notice that one. I was just kind of following the market, saying it's very boring. So didn't have much to talk about. I am doing this, of course, as we're gonna have in about an hour or so our academy meeting. But again, I was just kind of following what it is that I see. The 1 minute is sort of unimportant. In fact, KCU of all people should know that gaps themselves are more of a side effect, and so we don't give them all that credence. But the reason they happen, the underlying reason to what they happen, fooled me too. No, I got confused. I really did get confused. I kind of thought that was what we were looking right here in the open, but again, sort of, yes. I'm just following throughout the recent hours, and didn't really notice whether that was at the open or not. Actually, I did. I'm not gonna lie. I just didn't sort of remember it that tightly. because it's not important, realistically speaking. And I'll show you, and you specifically should know, my Academy members know why such things are unimportant, and we tend to follow the bigger, broader movements that a daily ebb and flow, literally, as I was just saying, is sort of unimportant on a grand scheme of things. Didn't fool you, Casey, but maybe that's something I should try and do on April Fool's Day, which I never try to fool anyone in any way, but I should try and do that. Anyway, so on the 5 minutes, still things are not all that interesting. In fact, on the 1 minute, since I kind of skipped over that, glossed over really, really, really quickly, but since we still are in the, have a handful of hours before the session locks in, arguably this actually appears to be becoming a little bit more bullish, so I'm not going to be surprised for the following minutes, although right now it appears to be more bearish actively as I am talking. I'm not going to be all that surprised if the price action will shoot back up just to retest that level. People tend to think with their asses, unfortunately, and if they see the market moving in one direction, that means it's going to persist in that direction, while watching a chart that literally is filled with these up and down corrective sort of ebb and flow movements. So on the grand scheme of things, we are becoming more bullish, as you can see in real time, and so basically entangled still with the 7,754.53, which is the source of the gap, is where the gap happened earlier. Arguably, I think, if I'm not mistaken, you know what, just for the fuck of it, by the way, we can actually see, I think it may be just the very same level of entanglement we had earlier at the open. No, very close, but no cigar. Very close, but no cigar. The other gap is a little bit different. Pardon me. 5 minutes. 5 minutes, things will become a little bit more interesting. Again, we are revolving around, arguably testing right now that 7,754, but the question is whether for longer, as we know on the minute scale, that means we can spend a handful of minutes still revolving and testing around that. But it appears to be that our 5 minute time frame is becoming slightly more bearish, and if we're looking at this sort of a wedge that formulated because of the diagonal upwards channel we actually have been moving within the framework of for some time now, it's not going to be all that surprising if we're going to move into that wedge right below, basically forming a movement of sorts throughout today's following session. Because if we're looking at a handful of, of course, if we're looking at a handful of minutes, we're looking just at the movement down. If we're looking at a broader sort of picture, the little probably longer duration of a time frame, which we're going to see in about a second in the 30-minute chart and 45 minutes in 1 hourly, and let's call it even 4 hourly. We're going to see a little bit of what's to happen in the following session, of course, and subsequently in the upcoming, the further out we go towards the daily chart, which oftentimes people are misled to think that the daily chart is the one you use to read today's movement. Of course, you do look at it to try and see the broader spectrum of the movement, to where again the directional momentum right now is pointed towards. But otherwise, we generally get that information from smaller time frames, and the daily is far more indicative of what it is that we're about to see within the following week as the week progresses, basically. So the daily, kind of that name, very misleading oftentimes. People, they look at the wrong things. So as you see, although again entangled within that region, still are not performing exceptionally well, like we have not performed earlier, at least for the time being. Again, bullish on the grand scheme of things, but as we see, these candlesticks can retrace very, very quickly and end up locking in. In fact, some of them end up locking red, and some of them deep a little bit lower, and it does seem like we're having a bit of a process that is teetering on that sort of turnaround, right? Potentially speaking. Again, let's examine the other time frames and see what they say. Otherwise, this is just what the current time frame is saying. We're not looking at the broader picture. This is almost like ignoring the bigger story and just looking, well, cherry picking basically, which we don't want to be doing. Technical analysis is predicated on the idea that you are forced to view certain elements in the price action, identify them, and then I understand where the directional momentum is taking you from and to. In this case, for example, if we want to be objective, we need to acknowledge that upper band that is right above us, that median. And so since we are actively bullish and not having any signs of crossover convergence, still a decent amount of divergence between the two factors, and so we're basically can end up seeing roughly around the 7,760 handle before we start correcting downwards. Now, is that the case? Only if we are truly bearish on a larger time frame, which in which case you can see that we are. On the 30 minutes, which of course symbolizes a longer duration of upcoming process, rather than your 5 minutes. Your 5 minutes are indicative of a handful of candlesticks that are just alike to that 5-minute candlestick. In other words, a handful of 5-minute candlesticks. You're basically looking at a prediction of 5 to 25 minutes, maybe 30 minutes. If you're really good, you can of course get an hour out of the 1-minute chart, give or take. The 30 minutes actually is far more indicative to what we are about to see towards the end of the session, because a handful of half-hour candlesticks is all we have left until the session gets locked in. Given the current structure of the channel and objectively looking at how the recent major action was testing the major resistance at the top of our, although upwards leaning channel, as you can tell, still, arguably, the momentum right now is pointing towards a downwards movement, and so again, indicative to what we saw on the even smaller time frames, moving into that potential wedge in at least, again, I'm not going to insist and say another whole wave internally or impulse, but rather in the upcoming sort of, a handful of candlesticks, given the time frame, as we said, far more likely that we're going to see a movement that is far more indicative or potentially indicative of a movement towards that bottom range, which is roughly at 7,720. Let's call it 20 with slippage, because 26 with slippage, it's going to be 20. So, and the reason we are expecting, first of all, again, we do have a bit of a sign. And again, remember, I just said, and I meant it, that gaps are not end all of things, so to speak, the end all be all of things. They are not as important as oftentimes people who are hobbyists in the sphere like to think and say. Gaps are a side effect. They themselves are a byproduct. You can ask my students in my one-on-one academy, my university, where I teach people how to be their own analyst and independent, sort of source of understanding where the market is headed, using all the tools, all the, toolkit, or that sort of allows you to identify where we are, whether it's on the cycle side of things, whether it's on the momentum side of things, support, resistance, of course, framework, and so on and so on. And so right now, although I just said earlier that gaps are not all that important, gaps themselves are a byproduct of something that is fundamentally extremely important to technical analysis and understanding how the structure looks like. Just like as we saw, the market is reacting, bouncing off, and respecting certain levels. Arguably, sometimes they appear to be very, very sort of unimportant, but the reason, the subsequent sort of reason, the underlying reasons why these things happen in the first place, those are actually pretty powerful. And that's the reason why the gaps occur where they do. So gaps are an indication, not always, not necessarily, because sometimes gaps can occur in between major levels that actually are important. So this is sort of the reason, the underlying reason, because there are, besides things, there is a far more important level in the very same coordinate of space, as far as we consider times price scale is our coordinate. Time is a little bit more different, because time can vary between processes. The very same process, an identical process, so to speak, can take different amounts of time. It does have a variability of an average, of course, and still yet we have seen the market exceed these variabilities and sometimes go sort of out of bounds in terms of time. For example, to simplify and explain what I mean, is that sometimes for a good professional is more familiar with a movement on a certain scale and is good at identifying these sort of movements, and normally these movements end up being, some sort of finished within a time scale of, let's say, week or two, or maybe three at most, and then somehow the market ends up being a little bit more sluggish than usual, a little bit slower, and so that very same movement is then complete within a time frame of, let's say, a month and a half, which is basically double the amount in week time, right? In weeks, so in terms of weeks, candlesticks of weeks, it will take, let's say, if in our case it would have been, I don't know, 3 weeks, it's going to take you about six of them, right? And of course, subsequently different amount of days, and the people do feel the market day by day, not hour by hour. Arguably, those who are far more attentive to the day-to-day flux. But the broader scheme of things basically is that where things start to matter, meaning whatever we see in the smaller time frames is just that, ebb and flow. As I said, basically you can kind of identify, the more you zoom out, the more you identify. Of course, it comes in scale. Now that you are able to identify the broader movement, you identify how this is just the regular ebb and flow of the market. These are the movements that matter, so to speak. But even that movement, we can see already a very clear indication of a potential range to which the market will be attracted to, which coincidentally, of course, did not happen on a random spot in space. Hi, Andrew. Good to see you here, as always, brother. And so it's quite indicative that the market, given its momentum, because look, if you have a gap and the momentum is indicative of a movement in a completely different direction, you should not expect a completion or an attempt of the market price action to move towards that gap. In our case, as we just saw, the smaller time frames, a bit of entanglement basically around the levels that we're at right now, potentially a little bit of a dip, which is still within the framework of the wedge flag-like formation harmonic pattern that we are generating. Those who did not notice, though, this is a pennant flag. Of course, that's the subsequent reason we're seeing this diagonal occurring from the smaller time frames. And so it's not going to be all that so surprising if we're going to see, again, as we said, entanglement right here at the edge. But the 45 minutes, for example, which we're going to examine in a second, we're going to examine in a second whether the larger time frame, which is the hourly, is indicative of a movement downwards, which will be more indicative of a breakout of the current range, or at least slippage out of it. So we're going to be able to examine. I want a call out like Andrew. What do you mean? You did get one. I just gave you a call out. So I'm not sure how, like, the right way to pronounce it. It's gonna be like layering, or am I just being stupid? And yeah, but shout out there. Now, so we're gonna look and examine at what the current time frame, of course, is saying. The current time frame is indicative. Yes, I said it right. No, no way. Layering, it's English much, bro. So again, this will be true. What we're seeing in the 45 minutes, which is far more indicative of a longer duration movement, which is indicative, again, the channel that we're establishing, or rather getting, is related to the time frame. It's related to the data points that the tool that we're using takes into consideration, and so these points become the valid points given the strength of the time frame. In fact, now that we're completely zoomed out, we can tell that actually that was a sort of a bullish movement, and this is more of a neutral zone where we are kind of moving into this narrow wedge and closing into this narrow tight sort of, range, if you will, of sorts, which of course will result in a break up or a breakdown, a breakout of this structure that we're building, potentially speaking, or maybe a break into the current channel as it is looking upwards. But this is where momentum kicks in, and we're going to look at momentum to identify where the market is indicative of its own momentum flowing onwards relative to how it was in previous likewise equal scales, right? It's a very simple system when you think about it. All in all, of course, I highly do recommend joining my university, where I literally tutor people one-on-one how to understand what are the things to understand, what are the things to know and be attentive to, and then what tools to use in order to identify them. Basically everything and anything you need in order to become a sort of beginner expert. You're not going to be right away an expert like myself. I have worked in the industry for many years, worked at multiple companies, various positions, all the way from the bottom all the way to being an analyst. And so I can tell you that, of course, there is a process to be had. It's not going to happen overnight. And even my graduates still themselves go through a process. In fact, later on, we're going to have a meeting with, yeah, I knew that, dear, but I wasn't sure whether I'm pronouncing it right. I mean, I had a feeling, just the way it's written, you know. So we're gonna actually, again, my students who themselves are capable of their own independent analysis, still we do meet on a weekly basis, sometimes even twice a week, sometimes even more, depending on my ability and availability. Don't forget, I have many students, many other things I'm doing life, after all, still a human being, so on and so on. So, but we do have weekly meetings with the academy graduates, so you're not thrown into the deep end. When you do graduate of the academy, you actually stay in the community, you attend weekly meetings, and you get to see me. Of course, you do analyze, bring in your own information, speak, ask questions or whatever, and you get to see me analyzing the market on a consistent basis, various different assets and the market itself, to understand where the broader flow of people don't know that, but most assets are interconnected or related in one way or another. And so it's kind of imperative to know the broader directionality of the market, not just what is happening right now in the following 5 seconds. Kind of makes sense. It's kind of like you need to read the entire book to know the story. You can't read, a quarter of it and be surprised you'll know really what's going on. So, pardon me, ladies and gentlemen. Now, in the current structure, since we already broke below the 50, we are far more likely to continue and see, as you already noticed, the current candlesticks are a lot more bearish in their nature. So we are seeing, for the current relative time frame, right, we are seeing more of a downtrend, more of a downwards leaning or pushing or tugging movement, if you can tell right away. On the screen, we're moving below, testing below that 7,754 that I've just mentioned. And regardless, remember, before that sort of next following hour expires, we still may end up testing some of those ranges, like 7,754.53. I hate to say that number at this point. Again, simply because we are within its vicinity, technically speaking, although we're below it. For those the uninitiated think, oh, Greg, but we're not at it. We're right now at 7,749, right? But that ebb and flow in the market can easily take us back to it, and so retesting it, which is sort of a process of confirmation that, yes, the market acknowledges, we've tested, we can continue on, execution, wink, wink. Don't forget, this is not just a game. There are people who are actively making money on these processes. And so they need to occur. It's not just, to check a V mark, to mark a V check. Yes, there we go. So, basically 45 minutes indicative of downwards continuation, at least relative to the current scale. And so potentially looking at 7,700-ish handle. Of course, it cannot be right below. It will take a handful of 45 candlesticks, which are towards the end of the session of today. And so that potentially be the direction we're going towards. 1 hour. 1 hour is an important time frame. Actually, it's a very indicative of the directionality we have in the following sort of leftover of what is this today's session. But I really use the 45 minutes in order not to jump, not to discombobulate the viewers all the way from 30 to an hour. And sometimes the directionality of the momentum can be so different that it can sort of confuse people. How is it that we transition from such a drastically looking bullish momentum to such drastically bearish momentum and so on? Because this is indicative of the broader movement and where we may end up being in the broader scheme of things, in fact, sort of time frame and movement wise. So as you can tell, this is quite indicative and confirmative of what we saw in the 45 minutes, which both of those are bearish. Of course, the hourly slightly condenses that process since the candlesticks represent a slightly longer duration of time. Right now, given the data points that we got from that template framework, basically we are right now working our way within this current channel, have been doing so for some time now. As you can see, evidently entered on 17th of July, right? 17th of July, right there. Yeah, exactly. Friday-ish, kind of. I mean, arguably we've been testing it. Yeah, 17th. And so right now we're actually testing current median. If you pay attention to the current channel we're at right now, arguably we're testing this median. And of course, wedged between this sort of resistance at the top, the 7,754.53, god damn it, and that diagonal broader wedge that we have been testing in actuality for some time now, as you can tell, which is part of the broader channel. We have transitioned, of course, to a newer channel that is a normal occurrence that takes place over time. The channels we do transition from channel to channel, especially given how we are now moving and scooting over into this broadly looking sideways channel. Yes, right now the data point that was generated in this area is so heavy that it sort of leans. If this is a boat and you put everyone on the boat, on the left side, guess what? The boat is now leaning leftwards. If you sort of scatter people around, or once you have people standing here, it will balance things out or bring things back to balance. In fact, to point to the directionality of this channel previously, here it is, this this arrow that is indicative of how the channel was directionally looking earlier. And now, once we're going to have potentially that corrective movement that we're already seeing in the barrel, in the making live. Right now, the market is preparing its momentum to move lower and lower and lower and complete that inner head and shoulders inside our head. Basically, earlier we had a head and shoulders. We're talking about the one we had right here at the shoulder area. Right now we're basically making a head and shoulders, and unfortunately, again, I'm sort of indicating here of the broader movement we're going to see. It does not mean that here, while moving sideways, we're not going to have some flux up and down. But again, unfortunately, that's just, you know, daily ebb and flow, and people take that too seriously and underestimate the broader movement and don't realize that such a small term, you know, corrective movement cannot change the directionality of where the cycle is headed. And unfortunately, you do need to know about the cycle, where, you know, how to count it, how to identify various landmark points, and so on and so on. But basically right now what we are experiencing is a head and shoulders of sorts internally. In fact, arguably we're going to see this head start correcting shortly downwards. We see the momentum is quite bearish still on the 1 hourly time frame and is becoming bearish again. So we're basically twisting over at our 50 range, which is indicative of a broader, longer duration sort of downwards trend and momentum. And that kind of means, or is indicative, that we're probably going to see a correction into that gap, at least moving towards the bottom of the channel, which we already tested before, which does allow us conveniently to complete and fill in that gap. Then when we're going to arrive at this point, of course, we'll be better judges of the directionality, because by the time we do make it, this momentum will be squeezed out, spent, and, you know, it kind of matters and depends how things will progress from that point onwards, because we can just reliably say that that's how things will look like onwards. Right now, that's the assessment. When we're going to get there, we're going to be better judging the momentum in real time. 4 hours. 4 hours, of course, is closer to our daily time frame, which basically is not just telling us what we're going to have in the leftover of today's session, but in this scale, we're already broadly looking at what potentially going to happen in tomorrow's session and the following sessions throughout the week. Of course, we're going to have confirmation on the daily, whether that really is correct or that's a short-term movement. For example, we may see, a good example would be, we may see indication that the market is going down, and we may see some movement down, but all it is a part of that wedge-like formation, as you can tell, kind of like so, and still be indicative of a movement right here before it still corrects and retests 7,754.53. Again, right now that actively is our main resistance, so it is what it is. Now, it is still actively bullish, although dominance right now is indicative of transitioning into bearish strength. More liquidity applied to selling rather than buying. Of course, I do lecture my members and students all the time about the reasons for why that behavior exactly happening right now, why that broader sideways movement. The market makers are actually selling off and liquidating without the average Joe, without the, you know, the retail participant realizing what's going on. The market makers I would say quietly, that's not so quiet. I would say rather aggressively selling into the market without the market average participant realizing what's going on. In fact, even though we spent we had bullish momentum, and yes, but arguably we spent most of it, and right now already seeing that crossover. For example, if we're looking right now at the daily time frame, which we just were talking about, we can see that momentum objectively is bullish because our K value, the 96.39, is higher than our 96.15, but arguably we are seeing a significant transition and change from bullish momentum, although we are in overbought territory. Anything and everything above 80 is far more indicative of bullish momentum. In fact, right now, this 96.43, basically we are, as you can see, and I've said this before, when you get this mixture of bullish and bearish momentum, kind of this entanglement of the forces, it's far more indicative of a retest, a sideways-like action, which we are actively seeing. Again, actively, we're going to say this is bullish, and this is neutral and sideways, but with some volatility in it. The lesser the volatility, of course, we can see that on the smaller time frames. At this scale, we're seeing the broader movement that is taking place and the transition of momentum. The real question becomes whether upwards from here or downwards from here when we complete. So right now, that's exactly what we're trying to determine. That is sort of the question at hand. And how are we going to determine that? By going to larger time frames, which going to be indicative of the broader movement. The very same way we said about smaller time frames, the very same way it's going to apply to larger time frames. Pretty simple. Now, and as you can see, by the way, given our data set that we have and the linear regression channel that we're getting given our structure is actually just to be set in the right way, adjusted. Yeah, no, we like it this way. We are actually testing median. Now, this is an interesting point because oftentimes, as we said, the market does tend to move within these channels up and down, basically, or from edge to edge, to be more precise to those who don't understand what we mean. Look, edge to edge, and then edge to edge, drop out. And so this movement actually, to be super precise and objective about things, is indicative of a potential movement to the upside, given how we're testing median from the bottom, potential bottom, right? Yes, this broader movement is still sideways, but objectively what we're seeing is this potential move towards the upside of the channel. Right now, temporarily, we're seeing entanglement and retest of this median, that center point, which is very strong, and that strength forces us to think, oh, maybe that's it, we ran, the bullish wave ran its course. Now, this is where things start to get a little bit more dicey. Weekly actually is confirming that. Weekly is indicative of a bullish price actions, and so the current price range, don't worry about it. That's sort of a different, broader channel that we established. I think, no, is that the one I'm thinking? Shouldn't be orange. Yeah, it should be orange, but it doesn't matter. It's a long-term established channel that we have been aware of, the market have established and acknowledged a long time ago. We just know it is so strong, and so I kept it on screen to know whether it will play a major role later down the line. It's a weekly channel that a channel that's established out of the weekly time frame and data set. Now, so right now we're basically examining a potential move to the upside, which, being so aggressively bullish within bearish territory, getting these results, I gotta consider that maybe this is, of course, it is to some extent the representation of the move we had so far, and things can change and divert, because if you zoom out for a second, you realize maybe it's part of the broader movement downwards and a transition like so. Something akin to this, literally similar to this. Pretty much give or take. This is the very same thing here. For you to be able to see things clearly and understand what I mean, how do we know, for example, that this movement is indicative of a change in direction upwards, which is indicative of that corrective upwards movement still, rather than a continuation and a transition from bearish to bullish cycle, just like here. How do we know that? Well, that is exactly what we're going to be looking at the monthly time frame. The monthly time frame, since it's so long, And you got to understand that the weekly, as we said, is indicative of a handful of candlesticks forward. A handful of candlesticks forward would be roughly about a month and a half. So sure, it does feel like a big time horizon given the weekly that we're looking at, but when we're looking at the monthly, and we're talking about predicting and using those very same tools about predicting several candlesticks forward, on the monthly, it's not a long time candlestick wise, but objectively speaking, we're talking about a handful of months, not a month and a half, probably 3 or 4. I mean, and you got to understand that that is already becoming a quarter. And in our perception, that's very, 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 very slow. Although a quarter in the stock market is like the equal of a quarter of a minute. Literally, the market moves very, very sluggishly, very slowly in the broader scheme of things, and you need to be aware of it to be able to identify and understand what's going on. Again, shout out to the university members. Right now, I am basically planning to take a bit of a vacation towards the end of the month, but I highly recommend you join in ASAP. There are awesome activities I'm doing with my members, talking about whether it's from safe havens such as gold, silver, and other precious metals. Of course, the energy sector, oil and its derivatives and related assets. Various independent individual companies, of course, which are still correlated to the stock market and their broader movement. And if the market breaks, they will break with. In fact, we just spoke about Tesla recently, how Tesla may enjoy from a form of a rally similar to what Palantir just recently had. But in fact, you can see my whole explanation right here on the screen, potentially retesting that 420 range, which is a very strong technical level. Those who can't see right now where we're at and confused about all the noise and junk, we are right now right here, and we are seeing a bit of a change in directionality. You can't say this is objectively as bearish as this was, right? So if you're going to look at this is bearish and this is corrective sideways. This can result still in a broader movement downwards. Now, do we think that necessarily is what's going to happen? Not necessarily, because again, if the market is not going to be permissive, meaning will not allow that price action, will not allow the framework of momentum environment wise to allow that bullish price action to play out, you're not going to see that. So it's very much dependent on the stock market. In fact, just very much the same way I said about Palantir's potential movement to the upside, simply because it would have not played out if you didn't have the bullish conditions for it. It's simply something that would have sort of been tapered and tamed down, and over the very same time frame, instead of seeing either an uptrend, would have seen more of a sideways trend and maybe a breakdown and a move towards sort of a bearish tendency. Instead, we got this correction. As I said, it's very much dependent on the broader stock market. The broader stock market will be permissive, at least going to be moving sideways, especially enjoying some rallies. Partially, arguably, we can blame that rally in the stock market for Palantir itself. So, of course, the assets are related, not just Palantir. Those who think that entire movement was generated by Palantir, you cannot be further from the truth, and you cannot be more wrong than that. It was actually generated by a broader, larger spectrum movement and a broader market, various sectors, various assets, a lot of bullish energy that arguably I wonder where it came from. But yeah, that sort of was the leading cause for that very, very bullish movement we just recently seen in the market. In fact, as we said, post such a rally, it's not going to be surprising to see the price action collapse back down, correct it. And in fact, as you can see, since the gap in Palantir's case located right at the bottom at 123 range, I think it was, originally, we have this gap and we have this gap. So the bottom should be 123, if I recall correctly. Yeah, somewhere around 123, 125, kind of that handle, wink, wink. Of course, you guys, if you know, you know. Shouldn't have done that. What did I just do? I just did lots of do's. Okay, that was good enough. Now let's lock that, and it should not be moved. That was an accident. So basically what we're seeing is a potential move from the current range where we're at, which is 181 towards 164 within the shorter time frame, generating that harmonic pattern of a head and shoulders, which is quite evident and clear, which results in a downwards movement if located in the right place in the cycle. Maybe there is a little bit more of a bump while we're still going towards midterms, because some of us are assessing that potentially that time dragging and stalling that is occurring right now is for the purpose of having a more favorable midterm election for Trump, and Trump is trying to soften the blow. I would say that I do think that Trump was planning at this point by now to finish this entire ordeal. I think he just underestimated how stubborn and evil the IRGC are, and what their sentiment is like, and they're not going to capitulate. They're fundamentally opposed by lifestyle, conceptually wise. They're completely different mentally and sort of worldview wise to the Western culture, that we were never, it was doomed from the get-go. We were never going to find a common language or common denominator and something to agree upon. Every time they are, talking about these talks is just stalling. One directional or both directional doesn't really matter. Right now, oil is arguably expensive enough for even smaller quantities to pay out for both sides. Of course, the RGC are suffering a lot more, and Trump is choking them and all that great stuff. But this is a very significant fundamental debate that we've been basically having in my Discord community. Highly recommend you all join on a continuous basis. We've been talking about this quite a lot. Whether it's through what the media is posting, through our own knowledge and information about things, discussions, and so on and so on. Of course, charts, highly important. This is the real thing that allows us to know the real directionality of the market, not just guessing and pulling stuff out of our stomachs, right, and saying what we think and guess and hope. Because I learned that people, I knew that always, but since I started working in the industry more and more, I realized that the vast majority of people are assholes of sorts, in that sense that they ask a question, and if the answer, and again, referring to me to an expert, somebody who works and does this for a living for many years now, and knows probably a lot better than they do. Sure, I can be wrong. I'm not perfect. We all get things wrong, even the experts in their own field. Don't forget that kind of an analogous to that would be is that don't forget that Gordon Ramsay sometimes also gets burnt or cut in the kitchen. Schumacher's cars also break sometimes. You know what I mean? A mechanic's car breaks sometimes. So don't be so blind and naive to think that I cannot make a mistake. Of course I can. But given my expertise and everything, and years of experience and whatnot, I've learned that it really is the majority of people that they are assholes, like assholes, but assholes. Why? Because sometimes, very rarely, that they're able to come up with the right question, and also even more rarely so that they have the right framework to understand and comprehend the answer. And if they're lucky enough to be intelligent and knowledgeable enough to comprehend the answers that I can bring to the table, if they're unsatisfied and their bias, their personal bias, is leaning in the other direction, now suddenly I'm evil and wrong. Okay. I'll remind those very same people that at the bottom crash point of COVID, if we're looking at the SPX, when we were still at the days of the pandemic, right, we have started moving rapidly downwards. And I've predicted this entire move to be a lot smaller, and it is broader outcome, and that subsequent rally that came right after. But to know that, you need to understand cyclicality, what are the sources, what are the origins of the various forces that are affecting the market and conditions. And when everybody were bearish, I was the only bull around, and brought, again, some sanity to this very insane market and sphere and field of things. And so I do know that I tend to give The unpopular opinion, oftentimes, of course, people's only popular opinion is market go up to the moon. That's their favorable, stance on things, which is actually true most of the time in the market, but not always. The very same way that it is true to say that most of the 59th minutes throughout the day will not move you from today into tomorrow. But there is one very precise, very particular 59th minute, which will be that transition point to the other day. The problem is that 59th minute will not look any different than the other 59th minutes that we had before. And so it's going to be very difficult to identify and recognize unless you know the pattern, you know the behavior, you know the forces that are affecting the market, and you're able to judge them in real time and identify what is the upcoming subsequent derivative move. And so as I said, the more I've been doing this, it is quite astounding the vastness of the majority. If basically what I'm trying to point at is that when I was a younger account manager, I used to think that it's probably about 60% that are assholes, ask questions, and if they don't get a favorable answer to their own personal bias, they basically get mad at you and, steer clear from you, for so to speak, even if it takes a while to unfold and, unravel, so to speak, and then come back crawling. Sad, very sad. Does kind of show a very not a great characteristic to anyone. Let's just say that, okay? Very lowbrow. And unfortunately, people do not recognize that because the conditions are playing out as they are. And so when people get these unfavorable answers that they get from professionals, like I said, they get upset and go away and then, call us names and whatnot. But you need to understand, these things are not derived from our gut feelings and choices or some arbitrary movements and measurements that we put into the market. There are very precise, very rigid rules of how you should measure and what measure and using what tool and where from and to come up with these correct answers. It's not a coincidence I've been able to identify all the support and resistance levels on the major indices and various assets, all the way from the COVID bottom, so consistently and so accurately every single time, even though my broader and my narrow sort of day-to-day analysis is absolutely accurate if you paid attention, because I've been, following as things unravel in front of us. And sure, it's taking a little longer for my broader assessment and thesis to play out. And still, again, I'm insisting on it, not because I want to or is it convenient. Let's be honest, it's not. It's not a convenient nor very popular stance. And if those who are misled to think that fear-mongering works on YouTube, no, it doesn't. And I don't think it's fear-mongering because, remember, I'll remind you, I'm not a perma bear. I am literally what the market gives me. And since I know, unlike that bottom point of COVID where we were moving into a bullish movement, we are now transitioning into a very prolonged bearish movement that is inevitable and going to be very unpleasant, again, inevitably because of the nature of itself. And it's not about time. It has nothing, arguably those who understand how the cycles end up playing out, you can say that time-wise things end up coincidentally, also matching somehow, which is, call it a coincidence, call it weirdness, call it a phenomena, don't give a shit, doesn't matter. I don't judge what I think or feel about these time frames, if you will, or how things are similar in the scope of time, because that is not indicative nor solid enough to rely on basically to derive your analysis from. And so we know we are far more relying on how movements, processes rather, beginning to end, again, measuring that hour and identifying that 59th minute and which one is the actual 59th minute that matters, and acting before it actually takes place, because acting after it takes place is a little bit more difficult, let's be fair. And so, yeah, we are seeing basically a preparation for potentially a bullish movement. But remember where we are. Let's land this ship. Basically, monthly, if it's bearish or bullish in a second, you will see, guys, it is quite indicative of where the broader directionality is. And we are again seeing a mixture, which will lead us in a second 2 hour, slightly larger time frames to identify where we're headed towards. Yuval, is this drop others are mentioning from September? We've been mentioning this drop for even longer. In fact, I'll show you something that the uninitiated are not paying attention nor noticing right now. For example, you will, okay, so when you're zoomed in, you're hyper-focused on the little rallies. You don't realize that while these rallies and drops that ebb and flow on a larger scheme of things is occurring, there is a broader cycle that's playing out. People do not follow these things. You cannot follow something you're not aware of. And so this thing has been playing out for quite longer. In fact, given the structure, this current high point, our current all-time high, should have, it's not about should have, but it doesn't have, by principle, by the rules of conduct of the road, because think about it. Conditions may vary and change on the road, which affects how you drive in the current band of a road. Let's say yesterday we're driving here 100 kilometers an hour, 100 miles an hour, whatever, 60. But today you can't because there is a traffic jam, and if you'll try to drive at that speed, you'll simply be going to be crashing into people. But are you subject to the very same rules of conduct that you were yesterday? Yes, you are. You see, the fundamental rules of the technical behavior of the market are actually very cyclical, very precise, and have been predicting that drop for some time now. And that's why we're able, you just kind of hit the nail on the head. This is why we're able to both identify very accurately that, sharper movement on the day-to-day basis, and yet predict something that is taking longer to play out. People like to make fun of Michael Burry, for example. A good example that I really like to bring to the table. In fact, oh look, Burry has been predicting this broader scheme movement downwards, a crash of sorts. I don't agree with Michael Burry that I don't think this crash will be 80% down on the broader scheme of the market. Maybe individual assets, sure, possible, but the indices will drop roughly about 50%, and this is quite consistent throughout the cycles throughout the history. If you know what to look at and where to look at and measure everything, you're going to realize that these drops are very consistent, in fact. And so, in my humble analysis, it should be 50% down. And even though it's not as severe as Michael Burry predicting, on the grand scheme of things, we're sort of seeing similar pattern of preparation for a major cyclical correction. All right? Even though Michael Burry is wrong to most people's opinions, and it's because it's been taking for a long time, I'll remind you that the very same Michael Burry appeared to be wrong back in 2009, right? In the prime real estate crisis, and ended up on top. He ended up being the one laughing all the way to the bank. Again, if we're talking about Greg, damn it, something with a P, I forgot his last name. Vennett's character from The Big Short, basically the amalgam of actually that actual real life person is Greg. I'm forgetting his last name. He's also named Greg, not Greg Abel, of course. Greg P with something with a P. Those who know what I'm talking about know. And even Vennett himself, as he said back in the movie, to quote him, I took a rash of shit for 2 years, but he ended up getting coming out with like a crazy amount of in the movie $47 million bonus check because he was right and made millions. And you need to understand that in the broad scheme of things, Greg Lippman, no, right? P, yeah. Thank you, Damien. Vennett is actually Greg Lippman. A lot of people don't know. And Michael Burry himself, at the end of the day, though people criticized him and criticizing him now, I'm not going to be surprised that at the end of the process, he's going to be the one laughing all the way to the bank. I'm not going to be surprised whatsoever. And in fact, it's kind of hilarious at sort of the average guy who is the first time, in the first cycle of his life in the market, is making fun of a, decade-long expert who has proven himself many times over. And I do find it a bit ridiculous. And I do think that these people are exactly the type of the people who end up being the assholes that ask a question, and if they don't get a bias, favorable opinion or a reply, they basically steer clear and hate you, just like in Michael Burry's case. In fact, if we want to talk about another Greg, not just Greg Lippman, I think either they mean Greg Abel himself, if you think about, Charlie's and Warren's replacement, and I would argue that Greg himself was selected exactly for that precise reason, because he's not a child and is adult enough to understand that the market is going to take a long time to turn around, like a ship in the water that generated so much momentum that even though the captain right now kicked the ship into reverse gear, actively speaking, the only thing that the ship is doing is just slowing down faster. Because if you don't kick it into reverse, you kick it into neutral, it will be over time, friction and so on and so on, of course, will slow down. It's going to take a long time, right? A long stopping distance. But if you kick it in reverse, which you almost, in the idea, technically speaking, I think you can do without ruining the rudders, of course, hopefully if you don't do it at an irrational speed, logically speaking. Even though the ship is already, engines are kicking in reverse and actively moving in reverse, the ship itself is still gliding forward a little bit through the water simply because of the generated momentum, which is exactly what we're seeing right now, that leftover of the momentum in that longer duration process. And once it runs out, people like Burry and Greg, of course, when the whole process will be complete, will start picking up as they always do. Burry is not a perma bear. He just is good at identifying patterns of behavior of the market that are indicative and surrounding major market corrections. You saw an article, Berkshire Hathaway is finally spending their money. Yeah, 10% of what they have been being used. Of course, look, they can be sitting idle altogether. And remember, there are, a handful of account managers that work there at the end of the day, and various clients that do need their needs satisfied and see, a green number on the screen, so to speak. But if you look at the broader scheme of things, you're going to realize this is not actual buying. And their own stocks, they're not bullish. Absolutely, they're not bullish yet. Yeah, Greg was chosen exactly for that reason of objectivity and understanding the broader cycle takes time to correct downwards. And even though his hands are itching and he has a lot of money at his disposal, now is the worst possible time to start buying, even though you really want to. It's like it's almost like having a temper tantrum against the market doesn't work. Well, big surprise. Try to pee against the tsunami, you're gonna drown. That shit doesn't work. We all know that. So, arguably, ladies and gents, we are in for a little bit of sideways price action. What we can see right here on the monthly still is that convergence, divergence between bullish and bearish. And if you're going to be objective, you're going to realize that this process right here is very, very similar to what we have processes on a downtrend. It's just that these processes, when they happen in this particular way, they are occurring right now. That entanglement between the moving average, basically the two different moving averages, longer, shorter duration, come up to the ability for us to understand whether the market is becoming more bearish, less bearish. Are we neutral? Are we transitioning? This is exactly why we use these momentum tools, because they take an average of a period that is relevant to the current price action, of course, from the event horizon, and develops a sample of the current momentum relative to the price action behavior itself, meaning the price action is comparing itself to itself, right? And so this is how we get this deduction of whether the market is actually bullish or bearish. Now, in the grand scheme of things right now, we are neutral, arguably, but we are still in the broader scheme of things in a downward trend, which we can see and I've been warning about in the quarterly. And even all that bullish momentum that now we had an influx of this bullish momentum into the system for the recent period, you're going to realize that all of it, again, temporarily curved our quarterly. And as we see, our smaller time frames are indicative of bearish price action. Once we become more bearish, that bullish range will collapse and will be more indicative of a breakdown in bullish momentum in the system, basically bullish liquidity being allocated and we're going to see more and more bearish tendency. In fact, this very precise point on a quarterly is highly indicative. It's not just that, by the way. It's the high point of the momentum itself towards that even lower momentum. So that overall broader transition, that the momentum is no longer as bullish as it was, into this downward trend, is very much indicative of a broader sell-off. This is precisely what people need to see, but the problem is because we're seeing this on a quarterly, this may end up taking time. It can take 1 quarter, but it can also take 3 and 4. And the difference between 1 quarter is 3 months versus 12. And humans are very impatient, let's be honest. Most people, I love it when people make fun of their kids and say, oh, they're, or talk down to their own kids and say their own kids are immature. Well, you're a fine example, aren't you? A beacon of maturity, right? You can't hold on to your own thesis and identify what the market is saying, and even bigger, broader experts, figures in the market who have proven themselves multiple times over, but you think the market was waiting for you to retire to give you a bullish rally. That's not how shit works. And God forbid an expert actually gives you an actual objective opinion and analysis on what things are like and how they're playing out. And if it does not stand in line with what you want or is favorable to your current portfolio, you're against it, and suddenly it's not going to happen until it does. In fact, one of the things I'm going to do with my members very, very soon, one of my members himself is a person who lived through various deep corrections, through the dot-com, through the real estate prime crisis, and all of these things basically sort of gone through these waves again and again and again, and experienced these things, and knows how long can these processes take. And I'm gonna do a whole full-on interview with this member, I'll bring him in for my community members to listen, talk about his own experience in these very events and how they play out, ask him questions. I'll be interviewing the person, of course. And so, because people, unfortunately, they think they know better by having a couple of years of experience of, 3, 4, 5, even 6 years in the market. It's nothing. 6 years or even a decade in the market is like a grain of sand in the Sahara. It's not that much. You need to be well researched into the market's past and behavior and understand how these things come together and brought up the market that we are now experiencing in modern times. Otherwise, you do not understand it. You have no freaking clue where we're at and why we're doing what we're doing and why we're experiencing what we're experiencing. And so, yes, I highly recommend, again, quick shout out to the community members, new members, all of the above. There's only one thing I want to shout out and give a very important sort of note. This tier, just like it says, it's only for Academy graduates. This tier is now a new tier that, again, it's a long story short. This is the tier that belongs to the members that already basically gone through this $5,000 one-on-one tutoring through the Academy, graduated from it, completed the process, and now are part of the weekly meeting sphere where we talk about things. Full access to the Discord without being an Academy member, but it does not give you the Academy tier. The only way to get to the Academy tier is one and only and simple, is join in through either this, and no, it's not $5,000 a month. This is a one-time payment of $5,000, and after which you're basically transferred to a whole different tier, which I give you sort of this temporary voucher for, but this is a one-time payment, and that's just kind of how it works. Those people who are not in the right sort of payment method or conditions will be simply refunded and sent back on their asses out of the Discord, out of the community, because that's not how we do things. If you want to just get to know how, to get the most basic access, get several channels, get access to several mostly important channels like the casual chat, and maybe several other important channels that are indicative and do allow you to get a framework and an idea what the community is all about. Although arguably it's pretty clear, we're focusing on technical analysis, geopolitics, everything and anything that sort of shows what the market is going to be like. Again, of course, Academy meetings that I direct my members and go through my own analysis. They bring their own assets, ask questions, Q&As, all sorts of fun things. As you can see, anything and everything, sort of to show people what the market is like through its various processes and how we eventually come up to a downtrend, which I've been predicting for quite some time, and nobody is predicting right now. So don't come at me later and tell me how this guy, that guy said they all predicted it, they all warned. No, right now, objectively, if you look around in the mass media, YouTube sphere, and everybody and anybody, 99.9, maybe of course you'll find a couple of fringe pseudo analysts that have a gut feeling that the market should be going down, but I have the ability to technically derive and see that the market using the various tools is indicative on its own that the market is going towards a major correction, and not just a temporary short one that's going to be shallow. And yes, the market will have that ebb and flow up and down. Yes, there will be even within, just like on in a trend up we have downwards corrections, the very same way on a trend down we're going to have upwards correction. Sorry, so if I confused what I was saying, what I meant was on an uptrend we have corrections that are down, and on a downtrend we have corrections that are up. That is a completely normal phenomena. Okay, let's be clear about that. Now, yep, haven't heard anyone speak of a downtrend right now. Wonderful. In fact, I can tell you right now where we're going to end up, give or take, based on the analysis, given the current structure and behavior of the market and framework, momentum, all of the above, and cycle. Like Plato, bring all the variables into one singular equation. In fact, as you can see already, while the market, so notice this, while the market is bullish, moving up, right? I'm giving a completely opposing thesis here. I'm saying the market's not just going to go down, but it's going to go down severely. In fact, establish a new lower low, a point, a major contradiction point, right? That will be completely contradictive to what we are seeing right now in the price action, to the point of being even a lower low. And in fact, arguably, I'm going to say that some of that range roughly seems as it stands right now, because we don't just fall overnight. Yes, the drops are oftentimes far more rapid. See, conviction takes time to build up. Fear is very powerful because people basically run away from the noise and the avalanche that is moving towards them without realizing it's actually going to stop at their feet in the first place. So you see, but in order to judge that, you need to know how to use and what. First of all, what tools? The most important thing is that people are missing is the context. Context you cannot have if you don't have the tools and understand how they function and cannot apply them correctly. It's just a logical thing. You cannot do complicated math if you have not gone through primary school and don't know basic math. It is a very simple thing. You cannot become an expert in physics if you don't know math. Okay, you cannot go into biotechnology if you don't know biology, and some technological aspects depends on what it is that you're going into. So you need to know multiple facets brought together in order to develop to that next level, right? So, for example, you can't go learn quantum physics if you don't know basic physics. It sort of goes hand in hand. In fact, biochemistry, biotech, nowadays you don't just need to know biology, you need to know chemistry, you need to know a lot of things. You need to have various sort of avenues that you're an expert in order to be able to learn that tertiary next following thing that literally is requires all these bottom parameters and elements for you to have in the first place as a precursor. So here you go. You have, in fact, my sort of analysis given the structure and everything. My members know. In fact, the beauty of my community is that I hate, in fact, the idea of remote managing a whole bunch of portfolios of people who just follow my thesis, because even though I use these tools, even a expert contractor sometimes make the wrong deduction, make the wrong measurement, right? I understand it, I'm aware. But the fundamental rules which we apply, the fundamental technical rules that we apply to the processes are so persistent and accurate, and there are not sort of too many variables that you can get to wrong. And the system itself, if you do it right, it's self-regulating most importantly. And then if you know how to use the system itself against itself, so to speak, fight fire with fire that was generated by the original fire, you can actually identify whether you're right or wrong. And again, I could be wrong, but the use of tools that that I've done, and the conclusion I have given my conviction based on my knowledge and experience of almost 2 decades in the industry, I can tell you that we are potentially, as it stands right now, gonna test 5800, 6100, 6000-ish, so 600, right? 1600, sorry. So basically that entire vicinity, 6900, is the range. Again, it's not a particular number. Notice I'm not giving a particular number, but I'm giving a range to which we're going to be moving towards. Similarly, so how right now we're not stuck at a particular line or testing a particular line, but rather we're engulfed or moving within the framework of a range. Sometimes that range, by the way, can be on one side can be diagonal, like so in this case, and horizontal on the other case, and even have slippage out of it all, right? Just to correct back in. So we'll see. Arguably, maybe this is a diagonal flat range. Maybe I'm misanalyzing things. We'll see. Again, the beauty is that the market will play out how it's going to play out. And, just like in the first case with Michael Burry, people can call him names, but at the end of the day, if he's will end up being the one laughing all the way to the bank, it's kind of a funny scenario where the guy who doesn't even win third place, harasses the guy who won the first place medal and says, how during the race I was ahead of you? No one gives a shit. I won. If at the end of the process, those who right now are bragging did not capitalize on their profits and end up being far deeper in the red and don't realize how easily that happens via the use or misuse of the market maker's abilities to identify where people's averages are at and use these averages against them, basically, and conditions and sentiment. And most importantly, people are completely blind to the most important facet, that market makers will not tell you that everything is going to be bad. Why? Because if everything is going to be bad, they need to sell their stock. And if they want to try and sell their stock, you don't need to believe that everything is going to be bad, because then you're not just not going to be buying theirs from them, you're going to be selling yours, which is going to be decreasing the value of their current holdings. So that is literally shooting themselves in the balls. Bad idea. And they would not do that. The same way and the same reasoning that you would have in this instance and logic, they would not do that. In fact, they would tell you that how everything is great. Sure, they will sprinkle a little bit of, maybe, blah, 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 blah. But they will not tell you in such a blunt, accurate, way, which, by the way, if anybody thinks I'm enjoying this bearish blah blah correction that we're going towards and for some time now, no, I prefer a bullish market that is easy and just trade up and make money. Yeah, that's a lot easier, believe it or not. I'm not a perma bear. In fact, I'm closer to being a lot more perma bullish, because the market in 70% of the broader scheme of things is bullish, not bearish. So, no. But it is what it is. If the market is saying it's going to go down, I don't fight it. I don't try to pee against that tsunami. I literally am a subject to it, just like you and everyone and anyone else, because I'm not a market maker. I'm a market identifier. And yeah, that is it, ladies and gents. So that is today's show. I need to run. I have a meeting with my members in about 25 minutes, so I need to do a couple of things beforehand. And I highly recommend you all join my community, become a member. I highly recommend you take advantage of the opportunity while prices are as they are, because people don't know. If you think that $5,000 is a steep price for actually knowing how to make hundreds of thousands of dollars, in fact, let me show you something. Here is a brag of one of my students, right? Here's just something I want to show you. Here is the testimonials. This is something that one of my students, who gone through basically the most basic tier of the academy and learned what everyone else did, was able to generate within 31 days. Arguably, there was no change between the 31 and 30th day, really. But basically, of course, he did not do that with $1,000 or $10,000, right? He did it with more money than he generated. But at the end of the day, if you think $5,000 is a steep price to know how to do that, sort of make these sort of results on a monthly basis, I don't know what to tell you. It's all statistical and it's all, a proof of concept, because sure, maybe you have a lesser amount of money and you then going to generate lesser returns, but your ROI is still ROI and it's still green and it's more money in your pocket to move forward and grow your portfolio exponentially, which is not as difficult as people think it is if you know what you're doing. And of course, there are other wonderful testimonials, whether it's about, how persistent, by the way, I am through the teachings and the periods of time. And it's very uncomfortable for me to be bearish for so long while not seeing things play out, and especially being a YouTuber and all that. Trust me, that does not pay the bills. In fact, again, most of the benefits for my community I pay out of my own pocket. But yeah, so if you want to support and help out this community grow and become a part of it and actually gain a skill set that will allow you to gain such results, that would be highly recommended for you rather than me. I'm fine. My community is fine. We'll be there with you or without you. You're the one missing out. Now, with that note in mind, ladies and gents, know that, like I said, $5,000 is nothing. And yeah, it's actually 50% discounted to the full price, which is $10,000. And on that note, like I said, join in the community. Hope to see you there. Hope, you'll join and ask questions and you'll get educated and will become better for your own sake. Because to me, it means nothing. I manage my own portfolio, you manage yours. I hope you'll have a wonderful day and a wonderful rest of the week, and I'll see you on the next one. Lots of love. Bye for now.